Hi guys, it's CryptoBirb Adrian speaking. Welcome to today's Friday webinar. Today we're going to discuss what's really been going and trading hot in the market. And of course, this got devastating effects for so many people. We've seen what I would dare call the most spectacular crash in the crypto financial history, at least for my career. I've never seen anything so highly expensive dropping literally to zero. So we're going to discuss Luna, we're going to discuss UST. We're going to discuss all the issues and all the problems that you should be aware of, and potentially the ways that is going to go and continue for this Terra side of the things, and as well going to go for a couple of charts just to start with. And if you guys are ready, make sure you stay tuned. We're going there right in a second. Check. I hope you guys are doing okay. Well, like I said, there have been so many emotions that are going right now and still continuing. So many people got hurt in the recent crash events, and this is actually leaving me speechless. Like I've just discussed, very briefly, I rarely ever see such spectacular fireworks on the negative side of the things in any markets on a planet. And we are talking about literally the one of the biggest projects in the world going literally to the damn zero after years of months of amazing price performance in what we call it this way, if we have a look in the charts. But in all honesty, in the hindsight, everything is obvious, right? There is such a thing called in finance that we know as hindsight bias, when we tend to overpower our own expectations, our own predictability, our own prediction skills, if you will, right? Everything is obvious in the hindsight, but nothing is really obvious when making the decision, right? So to kick it off, I want to highly say and emphasize that I highly sympathize with those who actually lost a lot of money in the crash. I had been there myself at the very early days of my trading, right? It didn't happen for me to be in Luna at that time. I didn't get hurt from or suffered financial losses from any kind of Terra side of the things in terms of Luna, in terms of UST, and so on. So I'm in a relatively comfortable position, but uncomfortable enough to make me care about you guys. So we're going to discuss and develop on so many things throughout the show. But to kick it off, I want to quickly get you guys what I usually get, right? In terms of a real quick and rushy market summary check, right? So let's give it a quick look. And what's been going on throughout the day, except for all the noise, of course, that you see on an intraday basis, you're looking at a somewhat positive side of the things in terms of the expectations from the industrials, right? So the equities analysis, stock market analysis starts off with getting into the industrial and Dow Jones Industrial Average. Dow Jones, as you know, is an index that actually comprises comprises of the most important relevant charts, stocks, equities for the industry. And while talking about that, this tells us somehow, to some extent, about the health of overall economy, if you look at it this way. And while looking at, of course, a lower low and breakdown for the prior support, the week is not closed just yet. It's actually closing in a couple of hours, 3-4 hours, if I'm not mistaken, right now from now. So I do assume, and I do take it as a huge warning, of course, with as much instability, as much chaos, as much noise that we see on the news side. Of course, the fundamental side of the things is not safe at all. We are talking about highly inflated economy. We are talking about rate hiking cycle. We are talking about inverted yield curves. We are talking about yields breaking through 42-year downwards trends. So there are so many black clouds that are actually should be making us so much more cautious than we usually should get, on the side of the things for the trading. And there is still a spark of and a glimpse of hope still left, right? Because assuming we do actually get somewhat of a pullback above this support region of hundreds, I would argue this can potentially make market a bottom, at least for the short term. But of course, this is just an educated guess, right? Because nobody or no charts in the planet in the world can tell you what is truly going to happen. And that we know that things can really change in the nick of an eye. So knowing of that, having a quick look into the composite index, of course, to have a little bit of more glimpse into the market risk appetite. As we know, the composites that are a bit more dangerous in the way they play, dangerous as in the risk in terms of the volatility and potential returns, of course. You can tell the short-term average is actually, accelerating to the downside and increasing this distance. I can say it's accelerating and increasing short-term momentum to the downside, mainly because of the distances that actually get, spread here, increasing in the increasing manner, to the downside between the short-term and the longer-term average. And of course, the flatness of the 200-day average on the composite chart, playing a fair long-term value price, if you will, according to the average performance of the past 200 days is 14,500 points, and we are heavily deviated against it, right? So eventually, I have no idea when, but eventually the prices tend to come back and revert back to the mean prices. So eventually the prices I see, reverting back and pulling back into the 14,500s, but this can be followed, or this can actually be happening with a I should say as a result rather than a cause, right? So there might be another 5-10% downwards move, and we cannot really do much about that, of course. In the composite index, while the composite index is actually riskier option for the equities, the large caps, which are usually more liquid, more, I should say, stable when compared with the composites. You're looking also at similar breakdowns, at similar weakness accelerating to the downside. The momentum to the downside is, of course, not exhausted just yet. This is bringing a lot of caution, and I see it only as a promising play for a potential mean reversion, only if we manage to reclaim this 4,100 support. Otherwise, I wouldn't really be surprised to see another downwards continuation periods. And if we have a look at later, what's been going on in the ETF side, you're looking at somewhat of a pattern, somewhat of a continuation pattern. Continuation or reversal, we never know that, of course, until it's too late quite often. But here we're looking at a potential continuation setup, right? Potential continuation setup, because all the averages are upwards. And when the averages are upwards and the pattern appears somewhere in the chart, typically it means continuation in the prior direction of the trend, right? More likely than the reversal, until or unless the fundamental trigger comes in. So having a look at energy sector is pretty widely, I should say, believed right now, at least in terms of the prices, that the market is likely to continue higher. The defensive markets, as in consumer staples or discretionary, has been meeting their somewhat of a medium term, or at least for the staples, medium term support per the shorter term curve. But in all honesty, we are looking at relatively post-crash environment. And before we go and dive into a proper analysis, I want to get you guys some main takeaways out of what I've already shared, right? While looking at the charts, while looking at approaching charts with the technical analysis side of the things, you have to acknowledge that not everything is discounted in the price chart, right? We don't know about what the politicians are planning for us. We don't know about what the governments are planning for us. We don't know if there is yet another pandemic around the corner. We don't know if an asteroid crashes into Earth. And technical analysis is only so much reliable, except that it cannot really predict the future really. So having that also, somewhere on our side of the things, looking at the charts, just like be it for the healthcare or for the industrials, but basic materials, right, or the technology side of the things, you do have to acknowledge that it shows you somewhat of the past performance, and the past performance doesn't ever guarantee future performance in those terms. So just because the market has been trending down for quite some time, ever since 2022 started, it doesn't mean it's going to continue like this forever, right? And instead, we do, as human beings, as people, tend to undergo psychological, emotional, biases at times, and we tend to believe, because of our saliency, that the markets, just because they've been going down, they're going to continue like this forever. But it doesn't always go this way, right? Same way, and very apparent example is Luna, right? We're going to cover it briefly in a brief moment. But before we do that, I want to get you guys a little bit of also understanding what's been going on for other relevant markets. You can tell there's a local rebound on the 30-year bond prices, right? Pulling back to the short-term average, finally catching up with the short-term average, which has been relentless in terms of how fast this has been spreading to the downside in the favors of the bears for the bond prices. And of course, for the opposite nature of it, we are looking at a somewhat mean reversion process situation going on for the yield, for the inverse relationship with the bond prices, of course. So 10-year yields also breaking right now, trying, or at least retesting this short-term average. Some healthy correction. This is what may be seen this way until some fundamental change, of course, comes, because any fundamental change would come and trigger would come from the change of monetary policy, right? If the Fed all of a sudden decides that there is no point in rising the rates anymore, perhaps the market would react a little bit differently. Per the gold ETF or the gold prices, you're looking at a pullback and a proper mean reversion towards the 200-day average. It's quite nasty, if you ask me, right? This local breakout, this failed breakout on top. Just gave another proof, another evidence, confirmation that the failed breakouts tend to perform in better, with better performance towards the opposite direction than anticipated, right? So when the pattern fails, it typically plays out stronger in the direction of the failure, if you will, rather than the projected targets for the regular patterns, right? So typically you see more violent moves as the cascade of liquidation takes place and the technical side of the things gets acceleration to the downside. So same for gold, same for silver so far locally. Of course, remember that those are short-term time frames, right? So short-term or medium-term time frames, and the chart can be bullish on the micro time frame on an intraday basis, can be bearish or neutral, on the medium-term basis, and can be, for example, secular bullish on the decade basis, right? So, and it's all because of the fractal nature of the charts and trends, that smaller trends actually build the larger trends. And having a brief look at the cryptocurrencies as a group in here, you can tell that we are in green. We're pretty heavily in green in terms of the the reversal locally, right? The local reversal has been taking place. You can tell there is a lot of similarities, and of course correlation is the reason between S&P 500, between the equities I had discussed earlier, and actual Bitcoin chart, right? So I would love to see Bitcoin reclaim back the same area, breaking through the short-term support given by the green average at around $33,000, $34,000, maybe 35. Always worth giving it a little bit of more margin on top of that, right? Nothing in this world is ideal. Just because there is a line in the chart, nobody sets a rule that the world is going to listen to this chart alone, and nobody's going to put orders around it. Instead, we are talking about major zones and areas rather than price levels. So do make sure you account for it as well. And if you have a look at the Burbicatus Pro side of the things as well, my favorite point, it nicely aligns with the amount of volume aggregated below a certain pattern that we're looking at, right? So there is definitely quite an increase in volatility, right? The bottom indicator actually is an ATR. Is an ATR of the 14 past periods, and the 14 past periods, have been spiking up as well as being going down, right? Typically, the spike in the volume side of the things confirms, at least for a short term, kind of like market puke, right? Means there's been enough of closing for the positions that were hanging out there, as either liquidations, maybe not necessarily for the futures there, but stops trigger, close positions, so protective stops. Overall volume of pieces, shares, issues traded, when this spikes, right? When this spikes on the volume, and I'm perhaps showing this is, I just noticed this is not a part, but this is ATR, and I was showing you guys early on Twitter as well, so many volume spikes in here, right? while all that I said is true also for the volatility, which I'm bringing back in a second, the volume spikes is what really we are also looking at, right? So the aggregation of volume spikes here, as the bottom pattern so far develops, is just a hint that the market may be in state of bottoming out, at least for the short term, right? Of course, the trend line breakouts, the pattern invest had to show this pattern breakout combination of both to makes sense. If we actually get a breakout to the upside at the end of the day, this may confirm prices going higher, that the risk on appetite is back in the market. But otherwise, if we fail, to hold the support and we actually fail to maintain a breakout over the head and shoulders pattern, and then I would argue we would later consolidate a little bit more in this range between $25,000 and the local high of 31, which is also clearly a resistance area from the previous regions. And this volume aggregation, this volume spikes is clearly what we are looking at, right? If we take it on the higher time frames, on the lower time frames, it's pretty apparent. And this volume aggregation is something that we want to look at as we go and dive through the charts, because typically this is a little bit of more promising in favor of reversal. So having a look back at the ATR side of the things, you can tell that the average ATR, which is this black curve in here, average volatility, ATR is an average to range, which is a measure of volatility, how fast and how much the market changes in the nominal terms. And the peak on the volatility, the peak on volume bars, just like I showed you before, is typically what ensures, or at least not, it doesn't ensure, but it enhances the chances of possibilities of seeing reversal, at least in the short-term basis, right? But still, my favorite chart, technical analysis applied, comes with a trend breakout system that I've personally using, coming from as one of the setups that you can use in the Barbicator Pro, right? So here I'm looking at a clear downwards pressure, an actual breakout threshold, just keeps climbing down ever since failing to hold $45,000 since then. And since early April, I've been pretty much following this in terms of being cashed out on my short-term positions, right? So I'm cashed. I didn't buy anything just in my short-term positions, with no change to my long-term holds until a weekly close at least sees a failure or confirmation above $30,000. But the short-term breakout level, the short-term breakout threshold that needs to be acknowledged and broken to the upside by the bullish side of the market, is by the current time frame trailer stop, which is this indicator, 33,639. And by looking at it, I want to see a proper weekly or at least higher time frame close, daily close, at least 12-hour close, but daily, weekly is better, outside the 33,639. And if it actually gives, just like I said, the underlying timeframes, because of the fractal nature, are likely going to back up this idea of further upwards continuation, at least into prior support areas, knowing that there is a polarity change in the technical analysis word, right? Polarity change tells you that the broken support turns into resistance and the broken resistance turns into support. So all things concerned, I do not want to confirm any reversal or counter any bottom, because in all honesty, it's completely irrelevant, right? Guessing the bottom or top is always like playing, it's like playing a lottery. Like, you cannot win 100 times in a row in a lottery. You may win 1 in a million, right? And you feel lucky. But other than this, I'm actually trading more proven concepts in terms of the trend breakout. So I want to see a proper trend breakout, and this one triggers when we get above close above 33,639. This is the most relevant chart I'm also eyeing for Bitcoin, and this is also naturally going to take and make all the rest of the market follow regarding the altcoins, right? So getting closer to the proper LUNA analysis with Xulian, who is our co-host for today's webinar, whom I cannot wait to hear more in a brief second. I want to get you guys some quick dedication to the total market cap charts in terms of the comparison for what's been going on in the crypto market from the trend side, right? So the bottom end of the chart is actually Bitcoin's chart, is the Bitcoin's price. Then in the middle you have a DeFi total market capitalization, and the altcoins on the right, on the very far end, right? So you can tell that Of course, there's been a lot of similarities in terms of breaking through the chart supports, breaking through the floors, and this has been relentless. This has been very, very difficult for many people, like I said, and definitely the crash of Luna doesn't really aid well the total market cap of altcoins, right? So we're likely seeing a bit more of extended to the downside crash on the total market cap side because of a rapid decrease on the capitalization of one of the biggest projects in the world for the cryptocurrencies. So all that things concerned, there is a lot of course, similarities after the failed breakouts that we had seen on altcoins, on DeFi, which had overreacted a little bit to the upside, on Bitcoin. And there has been an overall puke in the market, but does it really confirm, that it's going to continue like this forever? Well, I would argue that we want to see, of course, as much as you can apply technical analysis into trend recognition, to total market cap charts, right? This is not a price chart, so technical analysis best works when you can use it, when you can apply it for trading because of the patterns that we tend to see altogether. But if you cannot really force it, if you cannot really see traded, then technical analysis is only kind of like for the trend recognition, whether it's going up, down, sideways, and it favors the chances, right? So I would argue overall, if we see Bitcoin climbing back above, well, what it is to be $38,000, best 40,000, the higher the better, the higher chances are that we see DeFi recover as well as a result, and altcoins as well. But it's going to be harder to recover the total market cap of altcoins, knowing the Luna crash that happened. So moving on to the other part, here with Xulian, who's the co-host for today's webinar, guys. And we want to bring a complex look, a complex, analysis of what's really happened in this damn couple of days that we've just seen. What's happened, Xulian? Talk to us.
Oh, it's been quite a roller coaster. It started, I believe, Saturday, Sunday. I'll do a bit of a breakdown. There was a couple Twitter threads, a lot of conspiracy theories, of course, but tracking on chain, a lot of it does track back and does add up. So I'm using some of these threads to kind of help me with the timeline a bit. Over the weekend, essentially, we had a low liquidity weekend, which is very common in crypto. It's very common in the space. Low liquidity brings a lot of volatility sometimes, because just for anyone in the audience, to really easy way to understand liquidity, imagine a small pond. If you throw a rock into the small pond, water splashes. If you throw a rock into the ocean, water splashes, but it doesn't really make a difference. So when there's low liquidity, a rock can make a very big difference in that pond. When you had this weekend, Luna was getting ready to move into the 4 pool on Curve. So Curve in DeFi is one of the biggest apps for trading single same like assets. So for example, USDC with USDT. Luna was going to have a very big pool there with Frax, USDC, and USDT, and it was essentially going to be kind of the biggest place for liquidity, the biggest pool that they could exchange UST in and out of. So over the weekend, the original pool for UST, it was the 3 pool, was withdrawn from the part of LFG. They took out a lot of UST in order to migrate to the new pool. 10 minutes after this, there was a big sell-off of UST, which we can see here, 350 million UST into that pool, causing the first imbalance of the DPEG. And that was really small DPEG over the weekend. I believe it started on Saturday. It was maybe 98 cents at the time. So it wasn't unheard of to have that kind of DPEG in a low liquidity pool. Now, moving back a little bit, we know that UST was going to have a partial backing with Bitcoin. And this was going to allow for redemption. It was going to allow to mitigate any potential downward spiral using Bitcoin. But in order to buy this Bitcoin, it seems that the Luna Foundation Guard got an over-the-counter discount. So an OTC deal means over-the-counter, to buy cheaper Bitcoin. This allowed them to, one, get more Bitcoin, but the other participant got a lot of UST. it seems that this same UST that they received, they started to dump into the 4 pool. And then consequently, next step would be dumping onto Binance, which was the next low liquidity space outside of Terra for UST. Then the next spot was FTX. So they targeted during this low liquidity weekend all the places where UST had the lowest liquidity and were aggressively selling. Not only that, but it seems that a couple other wallets that were using Anchor, which was Terra's biggest savings platform. Many people might know it from the 20% you could earn on UST. It was a place that had, at the time, it was close to, it was in the top 4, top 5 DeFi protocols in terms of TVL. So they had close to $18 billion in TVL on Anchor. So right when this initial attack or sell-off in Curve and Binance started, there was right around 2 billion that was withdrawn from Anchor. Looking at the charts and looking on chain, we actually saw that it was largely 3 wallets that were withdrawing this amount of money. When you withdraw that amount of money, it's really easy to track those wallets and then see where they're going. But this was paired with a lot of fake selling or fake news on Luna on how it's not working. We can actually track a lot of these kind of fake information campaigns because there was just a lot of things on Twitter with threads. It was a huge FUD campaign at the same time that this was happening on chain. And this started to kind of unravel, cause this panic effect in retail. But the biggest issue was that the Bitcoin that was going to be used to restore the peg in these events, it wasn't ready to be deployed. There was going to be a specific way to use the Bitcoin on chain for people to be able to redeem the UST for Bitcoin in a decentralized way, but that wasn't ready. So it seems that Bitcoin was actually deployed onto Gemini and then onto a bunch of exchanges. We can actually see that CryptoQuant did a wonderful analysis on this, how they actually were able to track all the Bitcoin and kind of how all that movement transpired. So that was essentially what happened with the original breakdown of Luna. Now, if someone here doesn't understand exactly the burn and minting mechanism on Luna, I'll do a quick kind of breakdown on why UST and Luna and this kind of death spiral happened. So in order to mint UST, you have to burn Luna. And it goes the same way. In order to burn UST, you mint Luna. However, because this spiral was targeting not only Luna, but UST, it was making the Luna price fall too fast in order to absorb the UST volatility. So something we can actually see right here on the chart is we can see the exact moments that there was certain targets of liquidation spots on Luna. So there was I would say there was about 4 levels within kind of the Luna downfall that were the key levels of kind of the downfall. So I'm going to just paint out these boxes and kind of paint a picture for what happened in the story. Back here, May 9th was kind of the beginning. It was the first leg or big leg down. There was a big liquidation block right here on Anchor. We can track a lot of these liquidation blocks because we see how over leveraged people can be on Anchor. So it seems the first big sell-off of Luna, as people were trying to arbitrage, but they were selling, happened right here when they was getting really close to that liquidation block on Anchor. So when that liquidation block got hit, we had that big spike down, and then we got a bit of a rest. During that rest, people were urgently trying to save their liquidations on Luna and on Terra. However, during this time, there was a validator attack, a DDoS attack. So what is a DDoS attack? Essentially, you are targeting validators. What we can see here is all the operating validators on the Terra network. All of these validators were attacked at the exact same time, which means that they were getting spammed with transactions that were overpaying for the use of the validation. We can actually see Larry is one of the main developers on Terra. He shared this screenshot of his own validator, how he had a huge amount of unprocessed transactions that were paying the max amount of gas fees. So when you have this kind of situation, you're attacking the system and overcrowding the system so that it slows down every transaction. So if something like this were to happen on Ethereum, gas fees would skyrocket and it would be super expensive to transact. On Terra, it just made everything super slow. You were paying higher gas than normal, so you were going to be paying around $2, for example, on gas. But the transaction speeds were super slow. Instead of processing transactions in under a minute, it was taking maybe 10, 15, 20 minutes to process a transaction. So this delay of 20 minutes when people were trying to add collateral to not get liquidated made it so that during this time here, people were just panicking because they were unable to kind of recoup that collateral, pay off their debt, and then it made for this first leg down. During this first leg down, people still had some space, some breathing room in terms of, okay, as long as it doesn't go below 20, there is a huge liquidation block down here, they should be safe. However, with the attack happening, it was really hard to pay off any loan, add collateral, mitigate any other form of risk. Um, this was happening at the same time as Luna was being minted. So we can track here the amount of Luna that was being minted during the time. On May 9th, we can see that there was almost 2 million Luna minted, trying to absorb all the UST in circulation that was migrating out of the system. So this essentially adds extra sell side pressure, not only on the token, but you're also diluting the token as it's being sold off. So it's a form of hyperinflation. You can imagine it as dollars are just being constantly printed, even as they lose their value. So during that time, people were trying to pay off, even as the attack was happening. And then we kind of hit this block down here in the $10 range. Right in this block was kind of the final straw. There was the last liquidations left on Anchor. After this, there was pretty much no left collateral borrowing on Anchor. And we had that kind of final leg down in a sense, before it just completely died. This last candle, where we had a lot of volatility, some people I know that were catching knives at this point were able to get this crazy 900% candle at the bottom. Most likely, this was just shorts being closed. There was a huge amount of shorts happening right when this all started. So during the attack, Luna was also getting brought down by the level of shorts on the token itself. So all of this happened, and then after this, the amount of dilution in the token just made it to continue down and essentially die to a certain extent. So we can see the dilution got to the extent where the Luna supply is at 6 billion. Oh, sorry, more than that at this point. It's just a ridiculously high amount of supply. And it's at 6 trillion. Originally, Luna was only supposed to be a max 1 billion token. However, in order to try to absorb the UST volatility, they just authorized minting more Luna to try to absorb this, just diluted Luna to an extreme. So this is kind of the unfolding of the events, what happened, how it started. There's a lot of conspiracy theories out there. I really urge everyone to take a step back and do their own research, not fall for the conspiracy theories. There's a lot of information citing it might have been Citadel, it might have been BlackRock, CIA. There's really a lot of stuff. I urge people to take a step back. We can only see what happened on chain. We cannot see who actually did this and why it was all done. I know there's a lot of questions on next steps, what is going to happen. So as of 35 minutes ago or so, it seems that on the Agora, or on the platform where proposals are done, Agora Terra, Do Kwon proposed next steps to reconstitute the chain, preserve the community and the developer ecosystem. It's essentially going to be a hard fork of Luna, except it's going to have a different distribution of the total Luna supply. It's not going to have UST in the same way. If UST comes back, it will be in a fully collateralized format. So with this next process, it seems they will be dropping 40% of the tokens to Luna holders, 40% to UST holders, 10% to holders at the final moment, and then 10% to the community pool to kind of future development. What does this mean? Well, at the time, it doesn't really mean much because the whole network evaporated. The trust in the network has been pretty much lost completely. We can see it from one of the biggest protocols on there, Kujira. They have essentially announced that they will be building their own chain on Cosmos. So this is being seen across many protocols, across NFT projects. They are announcing their next steps. They are announcing how they will continue. And a lot of them are just looking at steps outside of Terra. So even if this resurrection of Terra happens, it's going to be really hard to kind of, one, get back all of these developers, get back the community, and get back the trust. So it's going to be really hard next steps. We can only wait and see what actually happens. There was a lot of money that was backing this ecosystem from VCs. We don't know if those VCs are going to be willing to spend because of the huge losses that they've already had at the moment. So if there's any questions from the chat, I tried to cover as much as possible and try to be as concise as possible because there's just been so much information coming out. So do let us know if you guys have comments, type it out. Happy to answer any other questions.
Exactly. I think this has been, pretty thorough, look into what's happened in the hindsight. Like I had, stated many times before, everything is obvious in hindsight, right? Everything is obvious in hindsight, but nothing truly is obvious when you're making the decision. So there's always this, uncertainty in terms of any money movement. It doesn't matter whether you wear your money, get your money in a cash in a pocket, or you put your money in some cryptocurrencies, or you get money in the bank that got, literally bailed out. It's always a risk. Any single financial move for your money is a risk that needs to be calculated and needs to be accounted. And I remember me very first days, of course, there was little to no risk management because eventually you learn from your mistakes, right? And as many people said, many people that you're actually maybe looking at, to on Twitter that are, perhaps more widely known to you guys as well. Well, they also were studying somewhere, right? And in all this crash that happened, the truth is that it doesn't even matter why it happened, right? Eventually what you're left with is the result. And with all that, I do think and I do believe that before we get to see some further screen sharing in a couple of seconds, perhaps Xulian maybe turning it on perhaps when he feels like, but I do believe that it's important, guys, for you to understand that what's happened at times is a lesson. I know it from my experience, right? We know also of people, of cases of people that are really taking it very, very roughly, very badly. And there's of course no words that can describe what many people are feeling right now. And I know because I had felt it in the past myself to some extent, right? Perhaps there wasn't like major amounts because at the time I wasn't really having a lot of money years ago. But the truth is that what is right now is important. What is the more important side of the things is just like Xulian just said, is what you need to look into the future with, right? So knowing to look into the future first and foremost is that money is recoverable. You can recover money, right? Through your hard work, through the time. It doesn't happen overnight, but with the amount of lessons that we get as traders, each and every single lesson has a cost. It can be interpreted as a cost of a book, perhaps that you want to read through and discover some new techniques, some new fundamental analysis, approaches, and so on. The lesson at times, if you refuse to go for the books, you may happen to take it, and test it on your skin, which I cannot always recommend. And consider the lesson, right? The way I'm approaching my own mistakes, and there are many of them, right? But do not fool yourself. There are so many mistakes I had done in the past. There are so many mistakes I keep constantly doing, but as the experience kind of like comes with the time, if you keep persisting, if you keep learning, if you keep improving, studying, getting more books, more charts, more patterns, more readings, more white papers, and whatnot, if you keep soaking with this knowledge that is all available 24/7, you will discover a brand new world of opportunities and the ways of making money, right? So all those things concerned, I do believe it's strongly important, and I want to firmly highlight it to you guys that money is recoverable. You can get money through your work, right? The money is no matter if there are loans, if the money's on loan, of course, it's worse if it's loan money. It's not easy. It doesn't make it easy for sure, but any money is restorable. Any single penny, any single dollar anybody loses can always be made back, right? And this can be made back by the time discipline, by learning what went wrong, and by not making the same mistakes over and over again. So what to do next basically depends on your decision. And I do highly suggest that, if you are in a rough situation, tough position, we had helped so many people in the past before for free of charge. And this tweet that I had posted on Twitter is no different. We had done it in the past, and in all honesty, it had helped thousands and thousands of people, to recover the fastest, their losses faster. It's not going to be immediate, right? Let's be honest. It's not going to be immediate, but it's perhaps going to make it easier for you, or more easily restored. So per the tweets, basically, I've always tried to help as many people as possible. And for each and every single person, who actually went for committing to the steps, as in like, retweet, comment, free help, so that I know who's actually there for the free help and who is just somewhere for the comment or fun. And those who will comment and with the free help phrase and DM me in the mailbox, your guys going to notice so many. I'm not going to display those tweets, okay? But there are thousands of people. There are thousands of people who are actually craving for help, and I'm offering it to you guys for free, right? So what I'm going to get you guys in the DM, after already responding to hundreds and thousands of people, you're going to get equipped with all the necessities, all the materials of a free limited membership, anything you guys need to help you recover faster. And normally this is a cost that would make you probably get you cost of book, cost of recovery, everything has a cost mark on it. But I'm offering that to you for free with no charges applied. Not a single penny is going to be charged from you with the help that you're going to receive. And I had done it so many times in the past, and so many people were happy and satisfied with that, and happy about the fate that they were offered the help. At times you just need a helping hand, and here I am reaching out to helping hand to you guys. I'm not going to force anybody, right? This is your very willing decision to accept it or not, but my hand is reaching out to you guys, and I highly encourage each and every single person to go for my tweet. It's actually pinned on my Twitter, right? It's pinned on my Twitter. You can have it. Just follow the steps so that I know that I can filter out the noise from people and have the people that truly need the help, and commit to helping you guys free of any charge whatsoever. You have my word, and I am a man of my word. So all those things concerned, let's see real quick if you guys have in perhaps the next 5 minutes any questions that you want to get answered. We'll pick myself and Xulian, depending on what kind of a question that is. We'll have about 5 minutes from now to cover basically those questions, and before we wrap and conclude on the most important points, right? So I do look into the chart, and let me have a very quick. Well, there is a question. I think this is one of the most probably craved ones. So, Julian, in your opinion, will Luna recover?
I think right now, I doubt it. How Luna itself as a project, UST as a project, algorithmic stablecoins have kind of lost any type of confidence for the time being. That said, there are a lot of projects within Luna that have done really great work. So even if the ecosystem or the network probably will not recover, that is yet to be found out. Ethereum recovered from the DAO hack, so it's not completely out of the cards. However, there is a lot of really good applications on Luna that will most likely survive, whether it's on Luna or on other chains. So I would indicate or suggest to people to switch their attention more to the builders that have made other protocols and where they're going, instead of focusing on the network itself that for now has a long road ahead for any type of recovery.
True, true, true. And I can also, comment on it very quick from my side of the things and the experience I had in the past. Well, basically, rarely ever it happens from the technical analysis point of view for a chart that goes down 99.99999% to recover, because it usually takes proportionally, or actually not proportionally, exponentially more to recover. There's this percentage rule. That basically makes it that if an asset goes down like 99.99%, it needs a 10,000x to recover to the upside, to break back to the all-time high levels. 10,000x, I think, is a very optimistic, not to say kind of the over-optimistic assumption that a coin may make. People are happy in the markets when a stock trades, returns at 20% in over a year. And here we are talking about 10,000x, right? So in my opinion, I have seen many, many projects in the past that actually went down heavily and they never recovered under those names. It doesn't mean, or it's not the same as recovering the losses as the money, right? Technically, the sooner you realize your losses, the better for you, because you free up your precious capital and can actually play out accordingly with it to place it, perhaps approach it with a more feasible approach and strategy. So all those things concerned, just like Julian said, I think it's more important to see into the future in terms of look into the future in terms of where the money is heading, where the investors are heading as the builders, right? Where the builders are heading to track, because if one coin, just destroys, of course, this entire ecosystem in terms of the PR, well, at times I assume there needs to be some proper backend change and perhaps rebranding to different names, right? It's not always going to be the most successful side, probably result you can get, but still, not all is lost in there, definitely. So let me have a look real quick at the next question that we will have. And just scrolling through the chats, I want to highly recommend and kind of remind everybody while looking at the chats, well, so that you guys, if you're not subscribed to our channel, make sure you hit the subscribe, hit the notifications bell zone to come up, catch up with any content and valuable pieces, just like this brilliant explanation throughout the show with Xulian on what's happened with Luna, with Luna, Terra, as the entire ecosystem, and also, guys, if you favor that, make sure you leave some questions for us, so that even if we don't manage to squeeze it into the show, you're going to get your answers hopefully after the show ends. So all those things concerned, I think there was one question as well. Just let me find it real quick. Check. Checking with you guys. I think this one somehow just slipped my attention. But all things concerned, well, I would say what is also kind of repeating over my DMs and the comments is, well, whether the the solution, the idea proposed by Dokon recently, of course, whether or not this is going to bring any help to the actual current Luna or UST token holders, investors. What is your opinion, Julian?
Well, it seems that the team is trying their best to compensate any holders, especially in the last moment. So there's going to be something. Whether that compensation has any value moving forward is a completely different question. But it seems that as much as possible, the Terraform Labs is trying to respect the last holders of UST, respect the last holders of Luna in some way. So again, it's what's coming next, and the focus will be on how can that move forward.
I got you. Yeah, definitely. I'm on your side there. There are questions that I had missed in the chats mainly because they were missing question mark, right? So I'm a simple guy. If I see a question mark, I try to answer that. Are you playing market short these days? Mostly I see you speaking about longs as opposed to shorts. Well, I do refer, it's mainly question to me, but I do generally not favor shorts plays, mainly because of limited fundamental short gains that you could get, right? Except for 1 in a trillion situations, just like you would see with Luna. But I don't see playing shorts overall a bet in the longer term, because stocks or emerging markets can actually go up an infinite amount of times and numbers and percentages to the upside, but they cannot really go below zero, right? We're of course talking and diverging here from the May 2020, infamous contracts for oil, for WTI crude oil, when they went, down prices for like minus $40 for the contract. But remember, those are derivatives. There was a price for a contract, not for oil. You cannot get oil as under the price of zero, basically, right? You can get contracts which are differently priced, and there are certain different deteriorations that changes between the contract price and the price of the underlying asset, and this actually imposes the backwardation, or well, even if you have a look at different approach to the futures market, because talking of shorts, talking about shorts, we are naturally talking about futures contracts, right? On those side of the derivatives, you also have options. And the options, you can be longer short option, and option can be put or call, right? So you have variety of four options, and buy put, buy call, sell put, sell call, right? And this is also somehow connected with different strategies and methodologies how to approach it. But personally, like, be it for the contango, be it for the backwardation that you see a price difference between the contract and the underlying asset, I do believe that shorts are limited for the potential. And eventually, if this is, if the market is, even if it's dead, it's just going to go flat at the bottom, right? It's not going to strangely continue to minus infinity. So limited downside potential versus unlimited upside potential. That's my bet, and that's why I'm mainly talking spot positions to start with, and then long side of the things. But eventually, the system and the systems that work best. Well, that's something that I need to personally also figure out just how to approach it within my own trading system, is the one that also catches the short side of the things, but usually as a counter trend and the short-term solution to the correction in the over longer-term position that you have. So all the things concerned is, well, I do think there is also a question from our friend here about why do you think Binance and Huobi started Luna trading? And this is the last question. We're going to have it covered by Xulian for today.
Yeah, I think they've been pausing and restarting trading for a while. Their justification is to allow exit liquidity for the market. In my opinion, it's just them trying to get extra trading fees because there's been very high volume in these trading pairs. At this point, there is no exit liquidity for anyone that was holding Luna above $1. Like, it's worthless. So it's just trading fees because there's just such high volume in those pairs at this moment now.
True. I have a similar view on that. So yeah, perhaps this is just a confirmatory bias, but overall, I do believe that, well, with so much discussed today, I think in terms of the market on the technical side of the things and the fundamental side of the things for stocks, for commodities, for Bitcoin, for Luna, for UST, and for what potentially may come next. If you guys missed the details that we were discussing throughout the show, make sure you actually watch the replay back after the show, because it's going to be available right at your service. And before we disconnect, I highly encourage you guys to, well, get your free help. Just like I was saying, it's pinned tweet on my Twitter account at CryptoBirb with an underscore in between. Rest are scammers and impersonators, so do not fall for it. And well, besides, I have this blue check mark if it gives anything. And just follow the steps that you get in here, and you get my word that I'm going to do my best, along with my team and brilliant people just like Xulian, to commit to helping you guys. Well, over the time, get you guys everything you basically need to make a faster recovery come in. And all those points that we had discussed throughout the show, myself and Xulian as a co-host today, greatly. I definitely appreciate it as well, Xulian, for your co-hosting. Great job, and this is amazing. Always great pleasure to have you on the show, and always great pleasure to have you in the team. And make sure, guys, you actually follow us on Twitter under the Birb Nest. Get your notifications on and subscribe to our channel on YouTube. So much valuable insights coming in each and every single day. And well, this has been Friday's webinar with CryptoBirb and with Xulian, and this time has come to an end. I want to, guys, wish you a pleasant day, rest of the day. Do not break down just yet. Do not give up. Keep digging, keep improving. My free reaching hand is out to you guys. It's open. Let's talk. And I see you guys hopefully in the nest with all your questions that are remaining. God bless everybody and stay safe. Bye-bye.